Good morning, everyone. Greg here, MasterTrader. Starting off with the transports here this morning, as they're coming up into this significant resistance area. They held the 200. They've pushed straight up, just like the rest of the markets did after the down day last week. Over here, they had pushed through some support, and now we're going to see what they can do here. Since they're in an established downtrend, lower highs and lower lows. You can see from the weekly there is no support underneath here until we get down to this level. However, if they hold here, they can go sideways for a while in front of this resistance, which would tell us that buyers are taking in the supply here, absorbing that supply, and rather than a pullback, and it may pull back a bit and spring right back up again, but an overall sideways type of movement in the face of this resistance would be bullish. And then looking at the weekly time frame over here on the right side, we would then see that this was, after the fact, of course, because we don't know before the fact, we would see that this was like a momentary breakdown failure here. And so even if we assume that the week goes out in this area, well, and then next week, do we get follow through to this, breakdown failure and green candle? And, as high as the markets are, and it seems, this is just hard to believe that they'll continue to move higher. After doing so, transports having broken down, showing relative weakness, that at some point later on, and it happens, it repairs the damage, you have to begin to change your biases that, well, now the transports are potentially repairing that damage. So we'll see if they can hold up here. If they go right back down, well, obviously they're not. The downtrend is still intact now. And then we would have this green candle being ignored. So when you get the Christmas tree effect of, green, red, green, red, green, red, it's just another way of looking at a chart and saying, what, it's best to stay away from this because it's directionless. So that'll be a big part of the watches of next week to see what these transports do, either one way or another. Our S&Ps here are making a new all-time high this morning, pushing up above this potential M top, which did become an N top because it broke down through the midpoint of it. The two highs and the low here, and it cracked right down through. It stopped at the next support and straight back up and up through it. You don't see this too often. I've seen it a few times over the years, but you don't see it too often with this kind of a mess and a break. But we know it was news related, so to some extent, we can rationalize it. But, typically this type of a pattern drops like this. It may just drop again or sideways a little and then a drop, but it reversed right back up again without ever breaking below a prior day's low. And now it's at a new all-time high. We're going into a holiday weekend, which historically holiday weekends tend to be more bullish than bearish. Now, weekly chart looks great. I mean, while the momentum has slowed down, as I've explained, the fact that, we've got a bottoming tail followed by a larger range green candle, then that assumes that it closes out that way. There's only one way to interpret this. Higher. Right? Higher. Now, these kind of patterns, just giving you a little thought as to, expectation, not really expectations, but things change and you have to change with them. So I'm telling the only way you can interpret this is it's going higher. But what if something happened over the weekend? I don't know, what that could possibly be. Well, I could imagine a few things, but it gaps down. Just looking at this pattern, and it gaps down under here. Well, that would clearly be bearish, and we would change that opinion about this pattern right now. Just says it's going higher. As we look at the Nasdaq, it as well negated that big red candle, marched right back up into its face, so to speak. It's at a new all-time high today. The weekly is in an uptrend. You know, here where it bottomed out and then pushed up. The consolidation got extended, and you know, a little more extended attempt to go down, right back up again. So where it stops, well, who knows at this point? You know, you got whole numbers here, maybe 6,000. That's not a prediction. You know, what we do is we just follow the trend. So as trends develop and new swing lows are created, you know, we mark them off. That's major support. If it breaks down below that on that time frame, the trend is over. So here we're going to need another day here for this to be established as a pivot or a major support on the weekly time frame. However, if it breaks down through there, that weekly time frame is going to be looking too good, you know, and this will be broke, and we will see, unless maybe it's just going to keep marching higher. So you know, from the weekly perspective, your first reference point of support is the prior weekly candle's low. So you just follow along. You keep it real simple. You know, until you have a pivot, you know, you just follow previous candles' lows. And then once your pivot is established, you've got your major support, and you then just follow those pivots, right, as they form. You do your trend analysis. Right? As I've told you before, no trend lines, no fib lines. Just follow the swing highs and swing lows. That's all you need to do. All right. Oil stalled here. Had a nice move off of the low, coming up into some resistance there. It's down this morning. Bonds, you know, just hanging out here. You know, had this move up and just hanging near resistance, so acting bullishly. But in the the big picture, it's going to have to clear this area here. I'm not drawing it very straight, but it has to clear that area. It has to hold above this low area here. So, you know, had a decent move up here into resistance, and bit of a trading range. So we'll see what happens there. And we covered oil. Amazon, where is it? Recommendation today, or was it Cohen, raised its price target to $1,125, right, from 1,000. So we'll see. You know, it's just again marching its way up here, and you know, possibly these are the type of things that cause a blow off if they continue and other things start to pick up, and that rather than breaking a swing low, prices accelerate to the upside and form a climactic sell setup, and that is where I would really need to have our internals, which have not given us a signal, those internals to come into alignment. And so, just to make it clear, meaning the markets do continue to push higher, they get even more extended, and then at that point, sentiment turns bearish. Everybody believes the market will continue to go higher. And as you can see right here, they don't believe it. They're actually speculating that it's going to come down, which will support it. And if it continues to push higher, well, then the breadth comes up into this area here, maybe even closer to 200. We'll see. But that's what we need with a climactic type of a sell setup. For those of you, what's a climactic sell setup? Well, something like this. Right, you go up, 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 and that doesn't necessarily have to stall. It could just keep going up, and then it gaps higher after that. You know, a novice type of a gap, and it sets up a high. You know, it immediately reverses it, and in this case, we had the retest, and then the drop, and then the market repaired the damage by creating this W bottom here, even in the face of this ugly red candle. So this year has been a market of a lot of, well, we'll see if it can survive this, and we'll see if it'll do that. And, you know, just from the market point of view, it's been one in which best to stay away from for the most part. The Nasdaq has done well. However, there's been a lot of stocks where there's opportunity. So that's the good thing about the market. Sometimes the markets themselves are great trading and investing vehicles, at other times they're not. But we do find stocks that, you know, have done quite well. And today we've got Best Buy, which great store there. That's up a whole bunch here. What's it up? $6, clearing these highs here, and that'll be an interesting for a gap trade this morning. And let's see, Bank of America doing nothing. Financials kind of really doing a lot of nothing there, but Citibank for some reason is outperforming. It never does till now. And what I want to look at, let's see this Snapchat. It's surviving after that gap down. It's not ready yet, but I'm continuing to keep an eye on that to see if it can come back from that death blow there. And if it does, it's going to be super bullish if it can come back from that fall that it had. Netflix up again. It looked like it was rolling over, and it's pushed back up again. It hasn't cleared this resistance, but obviously a very good sign. Apple not doing much of anything. But overall, the way most things look, and they're bullish. I've got a whole lot of stocks that have been trending down for quite a while. No time to go through them. But here's something somewhat encouraging from the retail sector. Sears, what looked like it was going to just, head down toward, who knows, 0 or whatever, new all-time lows there. And, it's up a bit at 879. So just clearing this high, which opens up for some type of retracement to see what it might do from here, Sears, giant retailer, a lot of speculation they'll go out of business, which seems inconceivable, but times change. So that's it for me for today, guys. Have a great trading day.